Should we buy or sell the Brazilian stock market ETF? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So when we look at the global stock markets, we do see that on average we have a minus 12.5% from the 52-week highs. So we have seen some pretty sizable pullbacks. Here is Brazil. It's in South America, and we do see that we are 24% from the 52-week low, but we have seen a minus 21.7% pullback. So we are officially in a bear market. I did a very in-depth 1-hour analysis of this thesis on the VIP Access platform. So if you want to see the super detailed analysis, fully, detailed, educational, then just go there. So here are the scores. Let's start now with the technicals for the Brazil ETF. But as you can see, the conclusion was overall pretty bearish. Here you have the super big picture of this ETF. We do see these monster multi-year time cycles. A rise, decline, rise, decline, and rise, and we are still actually part of the declining phase. In this time cycle, we do see that the time cycle is a bit different from what we have here, but they are pretty similar as well. So the expectation is further weakness for this market. At least that has been the primary pattern of the time cycles. And we do see that previous times where we have had these pullbacks, you see that the worst sell-off happened late into the time cycle. So here it's a bit bearish, but then we really see just boom towards the end. So there is a risk that given the history here of this ETF, how it trades, that there could be an accelerated sell-off that is like the capitulation low. So yeah, these are the weekly data points. The key thing that I found was on the dailies. The 200-day moving average is extremely important. So if you look here, and this is looking a bit back into the past, but it shows you its super importance. So here you have that super key moving average, and this was prior to the C19 lockdown. So we lost the 200-day moving average, it became resistance, and we did have a very substantial sell-off. And now when we zoom back, we see that the big rally here came when the 200-day moving average turned into support. Then we got a nice rally. And ever since, when we have had these deeper pullbacks, we have found support at the red 200-day moving average. And now we are zooming further and further towards our current time frame. So in this situation here, you see that the 200-day moving average is moving upwards, which is bullish, but here it turns into resistance, as you can see. So it becomes a good level for the bears to put on short positions. The problem for the bears is that the risk reward for putting on a short position is not as perfect as it was back here. So here you have like a nice shorting opportunity where you put on where we meet resistance at the 200-day moving average, and then you just go short. In this case here, you see that the pullback happened as we approached that 200-day moving average, but you could also argue that is a sign of the bears being eager as well to get into their positions. Because the odd thing when we look here at the weekly data points is that we've had a lot of weeks now in a row of rally for the Brazil ETF. So 1, 2, 3, 4, 5, 6. So 6 weeks in a row we have been up. Okay. We did not have that during this rally. Even here we had some pullbacks. Here 1, 2, 3, 4, 5, 6, 7, and then we have a pullback. So it is very rare. Here 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6. So you see that there's a pattern here. 1, 2, 3, 4, 5, 6. So that is the primary trend for this ETF, and we want to let the trend be our friend. So when we have now, we literally now have had 6 weeks in a row where this ETF has gone up. The probability do not favor an 8th week. Maybe we get the 7th week, but the odds are, they're not really there. That's the thing. The trend has been that after these very assertive rallies, we tend to see pullbacks. The thing about the Brazil ETF is that it has been performing really well recently. I mean, if we compare it to the S&P 500, the S&P has actually been substantially weaker. It has certainly not seen 6 weeks in a row of a rally. So there is a risk that we are actually going to see rotations. Hence, that those markets that have recently been performing well, that is where you have people with profits who will rotate out of them and into those that are have been underperforming. When we look at these other indicators on the weeklies, we do see that we have higher readings on the RSI and the 20-week PPO, though we do not have like really overbought readings though. On the daily data points, however, we do actually have that. Looking at the RSI reading we just recently had before the pullback began, this is a very rare reading. The vast majority of time we are below that level, and also in terms here of the PPOs, the 100, the distance from the 100-day moving average in blue, the 50-day in green, and the 20-day moving average, it is rare to have the current readings. So the trend, letting the trend be our friend, the trend is that we usually see pullbacks. We usually are lower. So yes, I do think that the 200-day moving average is the key line in the sand and the key part of a bearish thesis. It is where we are very likely to see continued resistance. So in terms of the technical analysis, I give this a -6. So yeah, this is definitively in favor of the bears. The bearish thesis is, however, contingent on 200 daily moving average continuing to offer resistance. Next, we will look at the seasonality. So to the right here, we do have averages over various years, 5, 7, and 10 years. So looking here at the seasonality, if we zoom in a bit here, we do see that there's a clear tendency for weakening seasonality heading towards the 23rd of March. Then we do tend to see some strength. Looking here towards the left, we do see that over the last 5 years, February and March are clearly bearish. Over the last, let's get the last 10 years, like that. February and March are some of the weaker months. April is very strong, but we are not close to April at this point. This is recorded on the 21st of February. So we unfortunately cannot trade the bullish April seasonality today. Over the last 20 years, February closes higher 55% of the time, March only 47% of the time. I think that we could argue quite strongly that the seasonality here is far more in favor of the bears than the bulls. The bulls could have a blast in April, but yeah, that's April. We are now in February. So yes, I give this a -5 on the seasonality. The next on the list are the fundamentals. So here I am comparing the EWZ, the Brazil ETF, against the ILF, which is the Latin America 40 ETF. When we go here to performance, we do see that in terms of year-to-date returns, Brazil is up 17% year-to-date. That is very impressive. It's not common to have those kinds of gains for the Brazilian stock market. So yeah, I do think that there are quite a few bulls that have tightened their stops at this point. When we look here at price earnings, we do see a PE of 17.43 for Brazil, 20.53 here for the broader Latin America ETF. So you could argue that there's some value in Brazil. The dividend yield is a bit higher, 2.9 versus 2.5. The 5-day volatility is very high though for both. When we look here at the holdings, we do see that there's not that many stocks. So 53 here for Brazil and 43 here for ILF. Here you can see the sector breakdown. So Brazil is very tilted towards finance and minerals, non-energy minerals and energy minerals, and these have recently been on a run. And when we look at the ILF, we do see that that one is also very, 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 very tilted towards those sectors. So there are severe problems in terms of diversification with both. And here you can see the market cap breakdown. So when I make a judgment on the fundamentals, I think of it a bit more broadly. It's not simply just price earnings, but I also look at dividend and sector breakdowns, market cap breakdowns, basically to assess risk. And I do think that the Brazil ETF, it is a bit, it's not well enough diversified. The recent volatility has also been quite substantial. So I do think that the people that look at fundamentals, that buy based on fundamentals, are somewhat less likely to buy into the Brazil ETF at this point due to the recent moves as well. That's why I give it the -2. So I'm feeling slightly more bearish than bullish here, but not like in a big way. But the reason why I go through the technical, seasonality, fundamentals, and relative performance, that is basically to have a bigger picture assessment of whether there's an increased risk of money flowing into or out of a given security. Next on the list here is to look at relative performance. Here we look at correlations. Long term, we have -22 with the S&P 500. We have 6% with the Emerging Markets ETF, EEM. And then we have 97% with the ILF, the Latin America ETF. 4% here with the dollar index. Daily data points. -69% SPY, 70 with the EEM, 99 with ILF, and -82% with the dollar index. So the strongest correlations we do have is definitively here with the ILF. No doubt about that. We also saw a clear negative relationship with the dollar index. So let's quickly do a technical analysis of the ILF. So in this case, if we zoom out a bit, we do see some similar trading behavior. The problem here is that we have, let's just draw that in. So we have lower highs, and we also see lower lows. That is the very definition of a downtrend. The contrarian take would be that because we are low, that there could be more value. When we go here to the daily data points, here, we do see something very similar. We see here this red 200-day moving average. It was a perfect short level for the bears here. Nice level to get short. Bulls get back in charge. We see a rally, but now it has become a resistance level. And here we did see weakness as we approached that key moving average. So that is the key level here as well. Let's very quickly look at the dollar index. Given the strong recent negative correlation, it means that a strength in the dollar will most likely be bad for Brazil. So yeah, dollar has risen to a level where there's been major battles between the bulls and the bears in the past. Going here to the daily data points as well. Yeah, it is in a major resistance zone. But if the dollar does get a strong catalyst, then it could smash through resistance. So yeah, that's something to just be aware of. But you could argue that the resistance zone here for the dollar, as long as it continues to offer resistance, at least that will be somewhat positive for Brazil. But a breakout would be really, really bad. Okay, anyway, here is Brazil compared against the ILF. So now we are looking at whether there's been outperformance or underperformance. So we do see that recently Brazil has been outperforming a bit the ILF. You see this black line that is being drawn here. It does show us that Brazil, it is approaching some key prior resistance levels. So yeah, there are quite a few levels that it has to clear in order to, like, build more momentum. So let's quickly look at, the seasonality to gauge whether it could maybe clear those levels. So here to the bottom is the seasonality between these pairs. So there's a tendency for Brazil to underperform the ILF heading here towards the 16th-ish of March. Then we usually see a bit of a strengthening peaking around mid-April and then weakness again. So this seasonality does not really increase the chances of, like, at least a major breakout. So yeah, okay. Let's now look at EWZ against the DX, the dollar index. When we compare the EWZ against the UUP, the UUP is the dollar index ETF, we do see that double bottoms have been a key thing. We see that back here, we do see that the right low was far lower than the left, so that is that was rather bearish. But then you see that the following double bottom was way more bullish, and recently we've also had a somewhat bullish-ish but smaller double bottom. So that is positive for Brazil. So there seems to be a bit more of a bigger picture trend change happening. So let's go here to the daily data points and quickly look at the seasonality. Okay, so the seasonality here, it does suggest that over the last 5, 7, and 10 years, from the current point, Brazil does tend to weaken against the dollar heading towards the 22nd-ish of March. Here I am comparing Brazil against the S&P 500. You could argue that there's a mother of all double bottoms currently. The right bottom here is, however, it is a bit lower than the left, so it's not a clean double bottom, but it is double bottom-ish. If it were to hold, it could be bullish. If we look, back here, like back here as an example, between October 2002 and heading all the way here towards June of 2008, we did actually see Brazil outperform the S&P 500. So it's not like without precedence. So yeah, but that is a very, very big picture. But to sum up, in terms of relative performance, I think that one could give make a pretty strong case that the Brazil, given the recent very strong rally we have seen for Brazil, the massive outperformance, it usually doesn't last that long. So there's a good reason to think that it could underperform these, at least multiple of the major indexes that we compared Brazil against. So I will give this one to the bears with a -5. So the average here is -4.5. So I'm feeling more bearish than bullish on the Brazil ETF. A key part of the bearish thesis is definitively this 200 daily moving average resistance. We did see that when we looked at the other technicals, seasonality, fundamentals, and relative performance, it corroborated the bearish thesis. But as always, we always use stops.